It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this video newsletter on Money Flow Index. In this episode, you'll learn about MFI, an overlooked but key technical tool. Let's begin. MFI measures the money flowing into or out of a stock. MFI is based on price action and volume. It takes volume into account in a way that candlestick chart patterns just can't, which is what makes it such a useful technical tool. And it's easy to read too. MFI is measured on a scale of 1 to 100, with a value of 50 being read as neutral. Values over 50 represent an inflow of money to the stock, and values under 50 represent an outflow of money from the stock. Typically, traders see MFIs of 20 or 30 or lower as a bullish sign, as it's theorized these stocks are oversold and due for a rebound. Conversely, most traders view MFIs of 70 or 80 or higher as being bearish, as it's thought these stocks are overbought and due for a correction. Really quickly, let's take a look at how MFI is calculated so you can better understand why it's such a valuable technical indicator. First, there's the concept of typical price, which is the average of the stock's high, low, and closing prices of a given day. Next, that value is multiplied by volume, so the impact of the day's trading on market sentiment can be determined. Typical price times volume is called money flow. The money ratio compares the days of positive money flow against the days of negative money flow, and is then used to calculate the MFI or money flow index, which is standardized to a scale of 100 by the formula MFI equals 100 divided by 1 plus money ratio. Don't worry, you'll never need to calculate MFI on your own, but understanding the mechanics of how it's calculated is essential to fully understanding its uses as a trading tool. More important, of course, is the answer to the next question. What does it mean? Well, MFI measures market sentiment, generally giving you an indication of whether a stock is overbought or oversold, and to what degree. It does this by looking at volume and price action, making it perhaps the most effective measurement of sentiment available to traders. However, MFI is not a standalone tool. Plenty of good stocks have high MFIs, and most bad ones have low MFIs. In order to make use of MFI, you need to check it against other technical indicators. Let's take a look at an example. Here we have a chart for Washington Mutual, stretching from November 3, 2003 to January 7, 2004. The blue dot is positioned at the stock's high point. Here I've drawn in some markers noting the point at which the stock's MFI started making it look bearish. WAMU's MFI first broke 70 on November 7th and then reached a high of 77 the next day. MFI stayed over 70 for a few more days, then dipped into the 60s until WAMU hit its high price of $46.55 on November 24th with an MFI of 75. This is when the stock fell to $44.95, and then a few weeks later it dipped below $40. For what it's worth, Washington Mutual shares now trade for 16 cents. There is some confusion as to the relationship between MFI and RSI, Relative Strength Index. This makes sense since both are on a scale of 1 to 100 and both purport to measure market sentiment. However, the big difference is that RSI is relative, while MFI is not. RSI measures a stock's performance versus other stocks' performances. If the general market has been on a huge bull run, then stocks that have been on smaller bull runs will have RSIs of under 50. MFI, by contrast, is not relative. If the stock market is on a huge bull run, then lots of stocks will have MFIs of over 50. There are advantages and disadvantages to each statistic, but suffice it to say they're different and both valuable, and neither is a standalone tool. To recap, MFI is measured on a scale of 1 to 100. It measures market sentiment and helps determine if a stock is overbought or oversold and to what degree. Even though they ostensibly measure the same thing, MFI is different from RSI. And, as many good stocks have high MFIs and vice versa, MFI should be used with other technical indicators and should never be the sole basis of a trading thesis. We hope you enjoyed this video newsletter on MFI, Money Flow Index. Thank you and have a wonderful day.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. Sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.